Okay, hope everybody is having a nice weekend. Today is December the 15th, 2012. Let's take a look at Apple. Apple have another crushing week. It came down and tested the 505 area, that 505.75 that was closed over here on the low. I mean, this the intraday low was 505.75, I believe. Yep. And yesterday hit the low of 505.58. So before we take a look at a little bit more on this chart here, I wanted to go to and take a look at the the intraday chart here. Here's a tick chart that I watched throughout the day. This is a 100 tick chart. Each bar represents 100 trade, regardless what the volume is or how long it takes. And you can see right here, they are defending that 506, 505 area. You see how it's come down here and being propped up, and also the volume is coming up. And then the other thing is, you notice that the intraday MACD is also presented some positive divergence. So it kind of tells you this level might be holding, and indeed they did, and they just run it up. And again, since it is a weekly OPEX day yesterday, they basically pinned this guy at 510. And this 2-bar movement here is just within of a 1 minute time frame. So you could tell there's a lot of trading going on here within that 1 minute. This is 100 trade. I mean, we're not talking about, just say 1 or 2 trade here. Each bar represent 100 trade here. So you could see this bar here is really within 1 minute of time frame. Then if you don't have your program, your whatever platform that you're using, and if you don't have a tick chart, then you might want to look at the 3-minute chart. You can see that 3-minute chart also show a similar type of a price pattern. Here, when it gets down to that 506, 505 area, you see the volume coming up. The upside volume, essentially they are running it back up. And also on the intraday, you can see that there's this trend line. And throughout the day, it's kind of stayed below this rewrap. So then let's take a look at the weekly price chart here. This is the weekly close. You can see this big head and shoulder pattern much more clear. Remember when I was talking about the head and shoulder pattern, about trading on the head and shoulder and trading off the head and shoulder pattern. You can see the break here, right? And there's a long-term trend line here somewhere around this 480 level. And we'll talk about these levels when I get back to the daily chart here. So we just kind of keep an eye on this pattern here. If the major move is basically way down there. So let's go and take a look at here. You see this again. This is a daily closing price line chart here. You can see this pattern, this head and shoulder pattern, much more clear. And you see the break on yesterday. It's essentially broke this neckline on this head and shoulder pattern. And the major move is projected down at somewhere around the 360 level if it can't find any support, intermediate support, and also the support on this trend line. So we're not going to worry about this level first. I think there's some other level up here that we need to kind of keep an eye on. But certainly, this head and shoulder pattern is a really obvious pattern that a lot of people and his mother is kind of keeping an eye on this thing. So what I have said in the past is that the market really reward the obvious, because it's too obvious that the likelihood of it playing it out is really low. So we have to keep an eye on a possible bounce off of this level, of this break here. And if I go and take a look at the, go back to the daily chart here, if you can see that there is a forming some sort of divergence here on the MACD, and if we could see this level here that actually hold, and let's say it come down and then start reversing, bouncing off of this particular level somewhere around the 497, that I have a near-term support, possible support level of 497, then we essentially see a divergence of the MACD here. Right? And that could foretell some of the potential move on the upside, or at least getting back to this neckline here, which is somewhere around the 524 area. So if it can't hold that, there is a little gap here. This is the 470, 480 gap. Okay, that a lot of people are also looking at this. So if the price dip below the 500 level, then most likely it probably come down to that area. And also there's that long-term trend line here. So this could be a significant support here. If that could not hold, then the obvious next level that it most likely go down is try to fill this gap at this 440, 420, and then if it can't bounce off of that, then just keep on coming down and eventually get down to this major move somewhere around 360. So those are the price level that kind of keep an eye on. I am holding some call on Apple. You think that I'm crazy or something? Well, basically we're speculator, right? We speculate based on odd, and the odd is, the likelihood is that this break of this head and shoulder pattern, when it is so obvious, there's always the possibility that it will be a fake move or a fake breakout, and that's basically the one I'm playing right now. If this is normal, if a knife catching or bottom fishing, then that would be gambling. So right now, I'm basically speculating. Now, if it come down and break this 497, I get slapped, and hey, fine. I just take my lump and take my losses and move on. But that's the way the game plays. So hopefully, your trading will pan out no matter which side of the trade that you take.